next big financial debacle in the world will be led by China. China used to be the locomotive of the global economies, okay? And it really was. The low wages over there, the high productivity, over 1 billion very intelligent people, hardworking people, and so on. And, I was so impressed the first time I went to China, met all the young people. First of course, you get the Chamber of Commerce speech and everything is so wonderful. And then you find from the young people, boy, I wish we could do this. I wish we could do this, and so on. But they're stopped all along the way by the government. I said, after I came back, we are just lucky that they have communism over there, because if they would ever adopt capitalism the way we have it in freedom, and all these young people would be able to do what they want to do, they would run all over the West. This morning, we saw Azora Bank has a big portfolio of U.S. real estate. They wrote off much of the bigger properties in the U.S. more than by 50%. That's a big write-down, 55% of their real estate holdings. And there's one comment from an analyst that even says that many of these loans, when they come to maturity, which is going to be the next year or two, they don't have the money to pay the loans off. So this is the big debacle. Over the next year and a half or so, we're going to see about $2 trillion worth of commercial real estate loans coming due. Okay, so the only thing that banks can do is then extend the terms. To say, okay, let's extend it for a few years so that they don't have to count it as a default. Banks don't like defaults, okay, because that's really bad for the balance sheet. So we're going to see a lot of these extensions, but the banks themselves have big problems. Yesterday we saw Community Bank of New York, again, start tumbling. It had to be rescued 1 year ago in March. It was rescued by several other banks. Now they want their money back that they put into the bank. Okay, so what happened to that stock yesterday? Down 38% in one day. Today, all the regional bank stocks were tumbling 5, 6, 7%. So this is what happens. These are not isolated incidents, and nobody on financial TV mentions it. They say, "Oh, well, this is one-off." No, this is systemic. We are seeing a gigantic systemic meltdown starting. And once it gets rolling, it's going to be really, really, really hard to stop. In China, the analysts, we've been looking at China foreign deposit outflows. It's actually called FDI, foreign deposit inflows. But now they're actually seeing for the first time outflows of this huge foreign money. The money is leaving China. Foreign money is leaving China. That is terrible. They are now seeing money leave so fast. There was even a rumor that when Xi Jinping was in San Francisco meeting with our president, he was hinting at getting a loan from the U.S. of $900 billion. So their money is being depleted very fast. There was one news article that I read a couple of weeks ago that the money going from China into Singapore over the last few months is $1.2 trillion. Trillion. Can you imagine this money going to Singapore for safety? I think, the problem last March when we had, 3 or 4 banks failed inside of a month, and that was the biggest ever in history, even bigger than the Depression. And so people think crisis is over just because a few banks failed and a couple of others, I think, have to be bailed out. No, that's not true. The losses are still sitting there in their bond portfolios. They made a very bad bet, which is the same false bets that the U.S. investors made in the bond market. We were shorting the bond market about 2.5 years ago, 3 years ago. Shorting the bond market. I said, this is a no-brainer. You got to sell the bonds short. They're going to go down 40 to 60%. And they went down, 48% so far. It's not the end yet. But they're still sitting on these losses, unrealized losses, and that is the big problem. So how are they going to make up for these unrealized losses? All these bonds that they are sitting on in their portfolios are underwater. They bought them when yields were low, 3%, so when the 3% goes up to 6% yield, then suddenly the bond goes down probably 35, 40, 45%. That's huge. In the 1970s, 1978, for example, when the Federal Reserve said, we're not going to use tight money to fight inflation, we're going to do it with interest rate policy, which meant raising interest rates. And my business was about 1 year old at the time. And I said, that means inflation full speed ahead. You have to sell bonds short, T-bonds. So we sold T-bonds short, and we bought we shorted the zeros, actually, which have their coupon clipped off. And so in effect, you get leverage, and over the next 30 years, they went up 40-fold in price, 40-fold. Yeah. So it was a huge profit. But what happened with these bonds is when inflation rises, the bond yields go up, which means bond prices go down. It's mathematical. It has nothing to do with market forces. It's just mathematics. Yesterday, when I heard the chairman of the Fed talking about the economy is strong, the labor market is very strong, that's all bunch of baloney. These are false numbers that they're using. These are all numbers that come from our Bureau of Labor Statistics, BLS. We call it Bureau of Lying Statistics because they lie with those numbers. They're all phony. They use seasonal adjustments to turn a big negative number into a positive number. In January of last year, for example, they reported 514,000 new jobs created. So we went to the BLS website, and here it had the real number. 2.5 million jobs were lost that month. So how do you turn 514 gained into a $2.5 million loss in jobs? These are numbers that are not realistic. Therefore, the GDP number is also totally wrong. They talk about a strong GDP. It's not strong because the GDP includes U.S. debt, financing, deficit. They're included in GDP. So if our deficit financing doubles and so on, boy, our GDP is going to be 10%. You can't, these numbers are false, and nobody on TV, none of these analysts take the trouble to analyze and see, okay, let's verify these numbers. Verification is so important. I always advise that to investors. Verify. Don't just believe what you hear on TV. Verify the number, assuming that they know what they're doing, which is a risky assumption, okay? Because I don't remember one Fed chairman who was correct in any of his forecasts. Now, that doesn't mean that for himself, he didn't know what was really going on. So that's always the question. I write that in every issue of our Wellington letter. Say, we don't know if this false information is intentional or if they're just dumb. We really don't know. I still don't know. I would like to know. It would be interesting to see if they really believe it. Maybe they do believe it. My degree was in chemistry, so I studied chemistry, and physics was my minor. But I took 2 years of economics just to see why economists are always so wrong, And I found out they didn't know what the heck they were talking about. For the second year, advanced economics, they used calculus, higher mathematics, and the professor didn't know it. So whenever it came to the math, to explain that, he asked me to come up in front of the class and explain it. Does anybody know? I wish somebody would tell me. Are they looking for a strong economy? He was so bullying yesterday. Oh, the economy is so strong, like he had accomplished a strong economy. And then another time, we got a bad economic number, and then the stock market goes up because now the Fed is going to cut rates. So what is it? Do we want a strong economy, or do we want a weak economy? Traditionally in an election year, the stock market goes up, okay? Because the president wants to get reelected, okay? Now, this time around, he's going to really need a booming economy, maybe, 10, 20% GDP growth, and 20% inflation that they're going to hide with their seasonal adjustments, because they never tell you the true inflation. When inflation was at the high about a year and a half ago, the official number was 9%. I think that was the high for inflation. The actual number calculated as it was in 1980 is done by Dr. John Williams of Shadow Stats, and he figured it was 16.1% inflation. That was the actual inflation. But the Bureau of Labor Statistics cranks it down to an acceptable 9% at that time. So now the question is, what will it be? What will inflation be? That's why these long-term forecasts right now of exact numbers, they're useless. Look at what they were just forecasting. Just a week ago, they were forecasting big interest rate cut by the Fed on March and six cuts totally this year by the Fed. Okay, so suddenly we hear one speech of Powell, the head of the Federal Reserve, and suddenly they reduce that to three. Oh, three cuts. Oh, maybe not even that. So you see how long-term forecasts change, how quickly. That's why people should not look at these numbers as absolutes. These are all guesses.